Well, thanks for watching this introductory video on my topic of cryptos are not taxable. Cryptographic currency, virtual currency is not taxable. Your accountant won't tell you this. It's not taxable, just like gold is not taxable. The sale of gold is, dollars are taxable. And so I'll explain this now. I'm not an accountant. I'm not an attorney. And ironically, those people appear to be not capable of explaining these things. I've been doing this work for over 30 years. And when cryptos came out in 2009, I began looking at them and I started buying them in 2011. So I'm very familiar with the technology and how this works. I'm very familiar with, and I'm not an accountant, but I'm very familiar with the accounting practices. But let me just go through a brief list here so you get an idea of kind of an overview of the items or the points I talk about in my video series. Now, what you're going to see is just the very beginning concepts of why cryptos are not taxable in the three-part video series, okay, that is introduced here with this video. What I want you to do, though, is subscribe to all my content for why cryptos are not taxable, so I can go through all the ins and outs, the details of every situation, such as W-9 reporting and 1099 reporting using crypto exchanges, what happens with soft wallets, offline wallets, private wallets, paper wallets, all these things, okay? Even wallets that are out of the country, okay? So let me just start with explaining that in 2014, the Internal Revenue Service defined cryptographic currency, or it calls that virtual currency, let's just say cryptos, as property, which is the same definition as gold. So gold's never changed. Your accountant's not sending you questionnaires regarding your possession of gold coins or something that's in your sock drawer or your home vault or something like that. So there's the same treatment should be followed with cryptographic currency or cryptos. It's still property. It has the same treatment. Just because the value of gold goes up, for example, you don't report that as a gain, although you could. It's not required. Same thing with cryptos. Now, I should tell you that the software on the exchanges is completely erroneous. You'll figure that out yourself and you'll know why. But let me just go through the legal aspects of this real quick. And then you can, if you want to, subscribe and you'll get more technical details. You can even share with your accountant if he's so willing and has an open mind, okay? So we know it's not taxable because we cannot pay the tax in the thing being taxed. That sounds really simple, but like, how am I paying the tax on gold, for example? If I sell gold, I get dollars, right? I'm paying that tax in dollars. If I want to pay tax in the valuation change of gold, I can do that, no problem. I'm not required to, but I can do it. There's two accounting practices here. One is called accrual-based accounting. That is, I'm going to report the value change in property or something as a gain. That you can do that, but you're not required to. The other is cash basis, which we should all mostly be using. Most of us watching this video should be using cash basis, which means I disposed of the property. There's another party that's interested in it, has it. I don't care about it anymore because I got dollars for it, and those dollars are taxable. So because I cannot pay the tax in the cryptos, and I'm not required to go get dollars. If I don't have any dollars at all, and I'm trading Litecoin with Bitcoin and the value goes up and I'm pretty smart, and let's say I, start with $1,000 and now it's $2,500 within the first year, you would think there's some tax on that. But okay, let's say there is a tax on it. How can I pay it? Where am I required to get dollars? I'm not, but I can only pay the tax in dollars. So that should tell you right there that it's not taxable, because you cannot be required to dispose of an asset to pay a tax. Okay, unless you file bankruptcy. All right. So there's more. I know that's probably a new concept for many of you, but anyways, keep it real simple. Okay. There are no new laws imposing taxes on cryptographic currency, on virtual currency, on cryptos. There are no new laws. There are no new tax laws. If there were, there would have been a proposal for new legislation. There would have been open for public debate. There would have been a statute, okay, that would be codified from congressional enactment. And then your Internal Revenue Service would have written a regulation to impose the tax on under that particular statute regarding cryptos. That's not happened. The IRS made it very easy. It defined cryptos as property. So that brings the treatment of that thing that could be taxed if you dispose of it, the proceeds from it can be taxed. It brings it under the purview of the last 100 years or so of case law and rules regarding taxation. It's very convenient. So of course, why would I have to write a new law to impose taxes on cryptos when I could just define it as something that could be taxed, in which the IRS did that, just to understand what it did. It didn't change your obligation to file reports or returns or anything like that. So there are no new laws regarding cryptographic currency. I know this is true in America and the United States. You can check probably in your country, it's the same thing. All right. Now, like I mentioned earlier, there are two different accounting practices. If you used accrual-based accounting, which you're not required to in most cases, if you have a publicly traded company, you probably have to use accrual-based accounting, in which case maybe it's a mid-level, mid-sized business where it's making several $100 million a year in gross income. Okay, those companies benefit from accrual-based accounting. Consumers that just have a job and maybe own a couple of assets, they're not benefiting from accrual-based accounting. It's not required, okay? You can choose your accounting practice. For us, most of us, it should be cash basis, and your accountant should be telling you this or acting accordingly. I'm finding that most are not doing that. So let's talk about exchanges, and you're going to get into this more on the video series, but the exchanges themselves, this is very interesting that people don't understand. When you put money on the exchange, as the term is used, you actually open up a bank account, you put dollars in there, you open up an exchange account, like at Coinbase, for example, or Kraken, right? And you transfer the money from your bank account over to Coinbase, the exchange, and then you allocate those dollars into the coins you want. So you don't own the coins because the exchange holds the private keys to those Bitcoin. Even though when you log into your account, you can see that you have the right to spend that money. That's fine. And here's your role in that relationship. Coinbase is the trustee, the account holder is the beneficiary. That's why you're able to access the coins, okay, on the platform, and that's why you're able to actually take them off of the platform and move them to another wallet if you want to, or sell them and take your dollars back out. You're able to do all that because you're the beneficiary. That's how it works. So there's a trust relationship. The trustee is the owner of the property. The beneficiary just decides what's to be done with the property. That's the nature of a trust, okay? So when you're exchanging coins from Litecoin to Bitcoin and back and forth, you're not the owner. And the ownership isn't changing because the private keys stay the same. Coinbase and these exchanges are using software as an overlay, like a spreadsheet, to reflect the changes you want to make. And they're not final until you dispose $4, okay? Then there's a settlement, and then the private keys are transferred. So if you move coins or property, the coins off of the exchange, the private keys have to be transferred to the beneficiary of that account, which then makes you the owner of those coins. Then you become the owner as a matter of law or as a matter of record, okay, as a matter of fact. So you cannot have a disposition, exchange, or sale. Now, don't confuse the IRS term in the statute, exchange, for crypto exchange. Two different things. In the statute, sell or exchange is the same thing. Exchange means there's another party involved. And there has to be two ends to the transaction. You have to buy something and then sell it. You don't just buy something and have a tax liability. Maybe somebody else does, but not you. The buyer doesn't. The seller does, okay? You have to be the seller. So the question is, what happens with the beneficial interest? Well, if the beneficial interests are the same, for example, if I'm trading Litecoin with Bitcoin, that's me, right? And my interest is the same. So it's going back and forth, but nothing is really changing. There's no ownership. There's no counterparty. Okay, that's why you don't have a tax liability on the exchange. Now, I've used that very basic, simple concept, and these others, I've used this very simple concept to ask the IRS using its own procedure, okay? The IRS publishes a method by which you can ask to make a legal determination. So what it wants you to do is make the legal determination and ask the IRS if it agrees with you, and which I did. And several dozen times, the IRS agreed that there is no tax on cryptographic currency on an exchange when you're trading coin for coin. What? Why isn't this being published? Well, you figure that out. You're going to discover how this works. You're going to discover how I can take millions of dollars in cryptos and make tens of millions of dollars in cryptos, and I can move them around and I can reinvest them. I can take profits and I can manage those gains, if you will, and I can do it legally in a tax-free way. Now, something I want to talk about in this intro video, I get into more sophisticated ways of changing property rights, okay? That's how you're able to do this but the very basic understanding is what I just explained. That was just an overview. I hope that's enough to get your interest. Please watch. I hope to see you on the other side. Thanks a lot.